Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, global house prices rebound as economists predict turning point. As well as that, Donald Trump scores a big win in the South Carolina Republican primary. And finally, the US is now hopeful of a Gaza ceasefire and hostage deal, which is to come in coming days. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure to subscribe. The first article to talk about is in relation to global house prices. Now, according to data analysis by the Financial Times, the drop in house prices in advanced economies has largely leveled out, with economists now seeing the current situation as a turning point. Across 37 OECD countries, nominal house prices grew by 2.1% in Q3 of 2023. Now, this is very important to obviously understand, as the global kind of housing market, housing prices is always, probably the most important measure in relation to, consumer, investments and consumer kind of related economy stuff. Now I kind of worded that poorly, but ultimately, if we think about what maybe is the greatest investment vehicle for the average consumer, for the everyday man, it is probably going to be their property. And that's why we often hear, comments around, the housing crisis, or, issues in relation to people being able to own their own home, always being a really important issue within politics. And as we've seen over the past year or two, we have seen a decline in the price of houses. And for those which are looking to buy houses, this might be a good thing, but we'll come to why that might not be the case in a second. But ultimately, for those invested in houses, for those that are property owners, this of course does not come as a good thing, as that is where they hold most of their investments, and their savings, and they rely on their mortgage, of course, so that they can kind of look to the future and own a home by the end of a certain period, of course. Now, the reason why we've actually seen this decline in housing prices is of course because of the topic which we talk about the most, interest rates, and the recent hikes that we have seen over the past 2 years. Obviously coming out of the COVID period, we saw a great deal of inflation, which was greatly affecting advanced economies especially, and as a result, we have seen central banks respond with the most rapid increase in interest rates for decades, really, in many of these major economies, as we've seen inflation rates peak to highs not seen for a very long time, since the 1980s even. And so as a result, we have kind of experienced this kind of really weird period within our economic age. And as for housing prices, as a result, we have seen a push to the downside, and that is because those higher interest rates cause mortgage rates to increase, as ultimately the interest rate affects the mortgage rate, and as a result, less people are able to buy houses, demand falls, and as a result, we see a kind of collapse in those housing prices. And now this is good, of course, to combat inflation, as the kind of increasing demand for houses, of course, doesn't help bring down inflation, of course. But ultimately, as we've spoken about, there can be effects on the economy in negative ways. And often we also do look at housing prices as kind of an indicator of how, well the economy is doing. If we're seeing housing prices decline, we're obviously then going to start seeing certain debt spirals, or at least certain spirals, negative spirals, for consumers within an economy, if housing is the key investment vehicle for individuals. And so understanding whether the housing market is doing well or doing poorly, or very hot or very, very cold, is always very important to understand. And that's why we're kind of talking about this, as ultimately understanding housing prices is not only important for understanding the economy, but also be helping us understand so many other different things as we do continue into the year of 2024. For example, of course, the housing market is going to be a key topic of discussion in relation to not only the US presidential election this year, but also in Britain, where we do have the United Kingdom's general election as well. So all these elections in these advanced economies will definitely be influenced by the housing market, which of course then goes on to affect stock markets. And housing markets directly affect stock markets as well. And understanding that, and understanding how the housing market might give us a better picture of the overall economy, is so important indeed. So that's why we're talking about this now. The figure that we did see with housing prices growing by 2.1% in Q3 of 2023 compares to a near stagnation at the start of last year. 1/3 of such nations saw quarter-on-quarter decline in the most recent period, which is still down from more than half at the start of last year. Following interest rate rises in 2022 being increased at their fastest pace in decades, housing prices took a turn to the downside, and that's basically what we just spoke about with interest rate hikes, with prices in OECD nations only growing by 0.6% in quarter-on-quarter by the end of 2022. A change in expectations for interest rate cuts, however, has caused mortgage rates to fall. This, in conjunction with a shortage of properties for sale, has pushed prices into the higher regions. Now, housing prices are rising, or at least stabilizing, in most advanced nations. That said, in nations such as Germany, Denmark, and Sweden, prices are expected to fall further. According to economists from Tower Price, migration and restrictive planning permission has maintained price pressure on housing prices in countries such as the UK or Canada or even Australia. Now, mortgage rates in the UK and US have increased in February, but remain below national peaks seen, of course, in 2023. So this is very important to understand. Definitely keep your eyes on news in relation to the housing market, as it is a key indicator, of course, for the economy. That's all to talk about on this article, though. Next article to talk about is far more political and on the topic of Donald Trump. Now, of course, we consistently come back to US politics as a topic of discussion, and just like geopolitics, this is because it greatly affects markets, and we often see certain political candidates affect stock markets in greater ways than others, and Donald Trump was certainly one of those. And as we've spoken about before, Donald Trump is the favorite to currently win the 2024 presidential election. And so ultimately understanding how rhetoric is shaping up, and how policy positions are being made, and who's the key opposition, and is there any party divides, and is there any kind of criminal issues in relation to Trump, is always super important to understand, and helps us gain a better picture, really, going into the very messy time, which of course is the presidential elections, which creates a great deal of volatility in the markets, which as traders, investors, and others have to deal with. So this is why this is so important to understand. Now, Donald Trump has secured his victory over the South Carolina Republican primary. Now, this comes in an act to defeat Nikki Haley in her home state. Now, of course, we've spoken about Nikki Haley many times now, and she's kind of this, once governor, which has kind of come out, not really the blue, not really the dark, but ultimately was not someone which we kind of were expecting to challenge Donald Trump, but ultimately is sort of putting up a good fight. Now, she has lost those previous primaries, including this one now, but ultimately, considering how popular Trump was going into these primaries, and how popular certain candidates such as Ron DeSantis was, what we've seen from Nikki Haley really is a strong performance. And as we've heard from other kind of political commentators and that kind of thing, maybe Nikki Haley is more so focused on how she can present herself going into 2028 as a presidential election, and how she's kind of setting herself up for that, as we do experience this presidential primary, as this Republican primary. But ultimately, she is putting up a good fight, and she does have the support of Wall Street. And so, understanding this and understanding how she may be able to gain traction in certain areas, such as more educated areas of US states, allows us to kind of understand whether Nikki Haley will be a strong challenger or not, and whether she really does still have, the ability to stay in this fight. Now, the final vote count was placed at 59.8% against 39.5% in favor of Donald Trump. Trump used the victory to realign everyone's attention to the presidential race rather than the current primary, with Trump using his victory speech to talk about Joe Biden. Now, this primary has now raised questions for Haley over how long she will stay in the running, since she has also lost 2 Republican primaries before this one. Trump also commented on the unity of the Republican Party in his victory speech, saying that he has never seen the Republican Party so unified as it is right now. Haley has, however, vowed to stay in the race, motivated by her belief that a large share of Republicans do not want Trump as their nominee in 2024. Haley's campaign thus far has been driven by millions of dollars in donations from Wall Street donors and others who see her as a stronger candidate against Biden. Now, this is, a very, very interesting topic to kind of keep on our minds, and is going to be very important throughout this entire year. So definitely understand what's going on with the Republican primaries. Of course, we have, I should know this, but I think it's called Big Tuesday or something like that, where we do have most primaries taking place, and I believe that's taking place in March. So definitely look out for that. That will be affecting markets greatly and adding to volatility. So keep your eyes on all of that. That's all to talk about in this article. Last article to talk about quickly is on the topic of Gaza and the US's involvement in a hostage deal, ceasefire deal, that kind of thing. Now, the US National Security Advisor Jake Sullivan has now said that a temporary ceasefire will be reached in the coming days. This comes following negotiations over last weekend, where the prospect of a firm and final agreement on the temporary Gaza ceasefire and hostage release could be reached. Now, why is this important? Well, firstly, it's because ultimately this war has greatly affected world tensions and has also affected, market volatility greatly. We've seen sell-offs in US equities, and we've seen a push to the upside for assets such as gold and oil, with, even US and British and other, kind of Western actors being affected by this war in the sense of global trade. We know that the Gulf of Aden and Red Sea has basically been shut down as a result of attacks by Houthi militants, which align themselves with Hamas. So ultimately, these kind of ceasefire agreements, hostage deals, are so important to understanding, how the world tensions may be eased, and how this ease of world tensions will affect markets. So this is why this is so important. And of course, we are coming to the charts just after this article, so stay around till you see that. Now, these comments lined up with Israeli news reporting that the Israeli War Cabinet had approved of a rough outline of a deal. Previous attempts of such an agreement have stalled out due to positions of Hamas and Israel, of course, being vastly different. For the agreement to be sealed, however, Sullivan made sure to make the comment that indirect discussions by Egypt and Qatar with Hamas still are needed. Netanyahu has repeatedly described Hamas's demands as delusional, and that for progress to be made, they need to back down on those proposals. Now, the rumored deal does seem to follow the parameters of the November hostage deal, where we did see prisoner exchanges for hostages, where 100 Israeli hostages were swapped for Palestinian prisoners. The demands by Hamas, however, want Palestinian prisoners which have been convicted for violent crimes to be released in large numbers. The deal would take place during Ramadan, beginning around March 10th, and the deal would pause the conflict for at least 7 weeks, it's expected. So keep your eyes on this article, very important indeed. Getting quickly onto the charts now, though, we've got lots to talk about as we do enter the new week. Now, to begin, we are on US indices as a whole, but more specifically the Dow Jones, the US 30. That is the one we follow most often. And whilst last week, of course, I apologize for not letting you guys know, but of course last week, we weren't doing these market briefings. I did take a break for a week, but ultimately we're back now, and we're kind of reviewing what actually took place during that week, really. And on US equities, it does seem like, we did see this kind of sell-off to begin with from this key area of liquidity that we had noted. So we did see this sell-off to the start of the week, but around midweek on Wednesday, we did see, a kind of spike in, bullish momentum to the upside, and we did see price push higher and break above those all-time highs that we did see be made on the US 30 not too long ago on February the 12th. So, that key push to the upside did take place at the end of last week, and now we are sitting near this minus 27.2% Fibonacci extension level. So definitely a key area and interesting level for price to currently be sitting at. The way price action is kind of shaping up, though, is something like is kind of presenting to us something which is quite similar to a great deal of sell side momentum, and something which kind of hints towards a retracement which could take place. So I think that's also very important to keep note of, as we could now see a move to the downside, a retracement, and then a continuation and push to the upside. So definitely keep your eyes on the US 30. Very interesting position indeed. Next to talk about, though, is the dollar. As for the dollar, we are seeing kind of a stagnation take place. We're not seeing much movement to the upside nor the downside. We did see a slight bit of volatility ending off last week, but ultimately, we're not seeing a push to the upside or downside. Interestingly enough, though, of course, as we did end off, the week before last, we did see a move to the downside from its highs. And since then, throughout last week, we did just see a slow decline, and ultimately not too much momentum to the upside nor downside. So interesting position to definitely note. We are kind of sitting on this liquidity zone, support level that we've seen price move away from before. So maybe keep that in your mind. But ultimately, it's the news and it's the fundamental data which is definitely going to be pushing the dollar this week, as we'll get to on the economic calendar after this, as there is a lot to talk about on the economic calendar. Next to talk about, though, is Euro USD, which of course, mirroring the dollar, is kind of stagnating as well, not doing too much. That said, we are kind of breaking the overall trend that we have seen on Euro USD since ending off December, which has been kind of this sell side momentum, but as we kind of but as since the 13th of February, it does seem like we have found this new bullish momentum, and price is now kind of moving to the upside, making higher highs, higher lows, and really kind of giving us some bullish prospects. So definitely keep your eyes on Euro USD. As I've spoken about before, we've got lots to talk about on the economic calendar, with lots of important Eurozone data coming out this week, including the Eurozone inflation rate figure, as well as some very important German consumer confidence figures. So, those pieces of data play heavily into the way that an asset like Euro USD, of course, will move. And that's in addition to, of course, any US data as well. So definitely keep your eyes on all of that. Next to talk about is pound yen. Of course, our favorite pair, and as you can see here, I have a trade mapped out which I did get into a week or two ago on Thursday, and since then we have seen a good performance to the upside, price moving away from this key liquidity level and all-time high kind of level, where it was kind of sitting on that 38.20 where I did get in, and since then we have seen bullish momentum to the upside, but ultimately we haven't actually seen price reach that minus 27.2% Fibonacci extension level just yet. So that's something that's very important to note, of course, and definitely important to note. I have drawn out, a kind of short-term retracement level, just to kind of note, where price could come back to in the short term before continuing higher, maybe. But whilst I am in the trade to the upside, it's important to remain neutral. And if I was to say, just remove this for a second, if I could hide it for just a second, if I was to just hide it for a second, ultimately, we are kind of seeing a bit of a stall out take place. Price did push into that, top level of the RSI, so maybe we've got some sell side opportunities, but definitely keep your eyes on pound yen. If we do see a move to the downside, always draw out that Fibonacci retracement tool and look for those key liquidity zones. And if we were to just line those up, it would seem to be this previous high. So maybe keep your eyes on that 38.20 as a level which price could come back down to, and another area to get into. So keep your eyes on all of that. Some important pound data this week as well. Getting through the rest of the charts though quickly, we have Bitcoin. Bitcoin's ranging, stalling out at these all-time highs. Definitely interesting to keep your eyes on though, as Bitcoin has been very volatile recently. Gold, on the other hand, is ranging at the moment, but of course with this new news over Gaza ceasefire, we could definitely see a sell-off take place. And finally, oil is also kind of seeing a sell-off, and that could definitely continue with this new Gaza ceasefire talk. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar, which we have to get through very quickly, despite a lot of data coming out. Now, firstly, if we can load it up, of course, we are getting the Japanese and Eurozone and Italian inflation rate figure. So lots of inflation rate figures to listen out for, as well as the US, German consumer confidence figures, as well as the US and Chinese manufacturing figures. So some important manufacturing figures as well. US and Swiss GDP growth rate figures will also be released this week, so definitely listen out for them, as well as the French and German inflation rate figure. So we're getting Japanese, Eurozone, Italian, German, French inflation rate figures, all very important, and most of them are part of the Eurozone, so understand that going into this week. As well as that, we're getting the German unemployment rate figure, as well as the Canadian GDP growth rate figure, and finally the US core PCE price index figure. That's all to talk about in the economic calendar though. We've talked about lots on the articles, of course, lots on the charts, and lots on the economic calendar. Hope you have a great trading week, a great week in general, but that's all from us at Wildwood Capital. Hope you have a great one. See you later. Bye.